April 17th, 2025. This is Overtime. I'm your host, Chris Vecchio in New York, Ilya Spivak in San Francisco, Dylan Radigan in Milan to take you through the rest of this hour, the final hour of the trading week here. Markets are closed tomorrow for a Good Friday holiday. It is Easter weekend. Happy Easter for those who celebrate. For those that don't or just here to talk markets, welcome. Hope you're on the platform. Hope you're on the website, tastylive.com. If you're there, come join us on YouTube. Tell us what you're all about, what you think of this action today. Quite frankly, a little bit of action today. S&P 500 down by 0.25%. The NASDAQ up by 0.07. We can talk about the Dow and the UNH move later on, but this is a pretty quiet day on a day where the President of the United States is openly talking about firing the Fed chair, which he can't do legally, but nonetheless, he's vamping on about it. Markets, we know. The median trader knows that Powell is probably going to be out of a job if the Supreme Court lets him fire Powell. And if he's not going to get reassigned in May 2026. So it's coming. Markets don't respond. Bonds don't respond. Gold doesn't respond. Dollar doesn't respond. It's actually a fairly quiet end to this week. We just had Netflix earnings come out for those that were with us at the end of last call. Netflix is higher here-ish now. It's been oscillating back and forth now up to $990. So starting to settle on a little of the upside. Obviously can't trade this right now. So if you did have a position on it, it was for long delta and moving up. Hopefully it worked out. If not, good luck on Monday. Ilya? Let's talk about this Fed chair potentially being fired by the President of the United States. A lot of bark. Market doesn't seem to think there's any bite right now.
It's an interesting sort of thing because you have a situation here, and I think looking at the bond market, you very clearly see it, where the market has decided that there is increasingly sovereign risk in U.S. assets, and that this risk isn't that the U.S. is going to lose its predominance or anything of the sort, but there's as we discussed on the show yesterday, there's gradients. It's not just everything is great or total Armageddon. There's middle steps, and clearly we're sort of tilting in the direction of wait a second. We don't want to necessarily be holding U.S. assets because who knows what's going to happen. And that's the building of the term premium in treasuries. And that's what's driving yields higher. So if you were the president and you said, I want yields to be lower, it's actually very much in your own hands because the reason that people are so concerned is because of the uncertainty you've created. Mm-hmm. The surge in term premium has to do with the tariffs and the uncertainty around them. All of these continuous kicks of the can down the road are just telling the markets, well, we still can't find anything forecastable to actually plan around. So what are we going to do? Nothing. We're just going to demand more compensation for duration risk, and that's it. Okay, so the president comes out and in a Truth Social post says, well, look at the ECB. They've been cutting and they're cutting again, and they just cut another time. Meanwhile, Fed Chair Powell wasn't doing anything. Not like Powell can set policy individually by fiat, but nevertheless, he's just sitting around, can't wait for him to be essentially relieved of his duties. And I'm paraphrasing here. I think he said something along the lines of terminated or something like that. If ever there was a misunderstanding of the moment, I mean, the president is adding more fuel into the very same situation that's driving yields higher, which is the opposite of what he wants. By creating more uncertainty around who's going to be the Fed chair, the president is increasing borrowing costs, not decreasing them, by feeding that rise in term premium. Mm-hmm. Whereas what he could be doing is creating certainty around his tariff regime, which would actually drive yields lower by reducing that uncertainty.
It would help reduce that uncertainty. Dylan, these remarks about Powell leaving. He said, quote, "I'm not happy with him. If I want him out, he'll be out of there real fast, believe me," unquote. This was at an event today with your Prime Minister, Giorgia Meloni. Do you think that
she's in town?
Do you think that this is a sign that maybe the U.S. and the EU could be close to any sort of understanding, a memorandum of understanding, if you will, or is Meloni just being dispatched there because
I thought that,
speculate with
far
me.
be it. Listen, Donald Trump he's your friend today and he'll kill you tomorrow. So, Donald Trump likes pretty girls. Giorgia Meloni he probably sees as a pretty girl, and so he likes to hang out with her. But I believe he has absolutely no loyalty or general. I mean, they've made their utter disdain for all of the European prime ministers very clearly known. They sent the vice president to Europe as soon as they were elected to tell Europe off. They have no respect for European government or European leadership in any way, shape, or form. But at the same time, Mr. Trump, the president of the United States, is socially very adept, and the Italian prime minister is probably socially the most capable of the leadership crew in Europe. But I don't see what happened between Meloni and Trump today in Washington, D.C. as anything more than a social ritual that I think has little to no bearing on policy. It's a photo op for both of them.
Fair enough. The Powell comments today, I think, if you've been watching Trump and what him and his administration have said regarding the Federal Reserve during the campaign up to now, it's pretty clear they're not a fan of Powell. They accused Powell of playing politics when he cut rates back in September. Trump lambasted him for that. I think the silver lining for today is that, given the comments here, if Trump wanted him out of there, he'd be out there as soon as possible. Well, he's fired everyone else already. Hasn't he gone around with a chainsaw? Doge going through the administration, firing every person that can be fired under the executive branch's whim? Hasn't happened with Powell yet. Not just because it'd be destabilizing for the market. The president may not have that authority. We've covered the lawsuit that's making its way through the court system right now, and it's now risen to the level of SCOTUS regarding Humphrey's executor. It's a 1930s ruling when FDR tried to fire an FTC commissioner, and during the deliberations, this guy Humphrey died. And so the question was whether or not there wasn't even a lawsuit or could continue to go on. Ultimately, the widow is able to carry the lawsuit forward and ruled that the president can't unilaterally fire these independent, non-political commissioners. And no president has challenged this in 90 years to effect. So if the Supreme Court upholds it, then Trump can't fire Powell. If the Supreme Court overturns Humphrey's executor, then he can fire whoever he wants. And that's why I think the market is saying, well, the Supreme Court isn't gonna let this happen. So if Trump really wanted to get rid of Powell, he would have already gotten rid of him. So this is a lot of talk today, not much more than that.
Well, interestingly, there was an article out, Politico picked it up at a few other outlets as well, citing, of course, unknown people familiar with the matter, saying Scott Bessent is over there yelling up a storm about this thing and trying to caution the president that any kind of attempt to remove Powell or otherwise meddle with what the Fed is doing would, in fact, yield, as we're saying here, the exact opposite result. Higher yields, not lower. And there may not be anything the Fed could do about it, because the Fed is only as good as its credibility. It can't mandate all of the interest rates in the economy. All it can do is be credible, move its rates as a kind of baseline for the cost of money, and if the markets generally believe the Fed is credible, they'll follow. But if they don't, then they won't. And so you make the Fed appear to be a stooge of the executive branch, and all you do is you set yields on a dramatic rise higher as uncertainty builds. It's, I suppose, what we could call, Chris, the fool Erdogan.
God. if people don't know what that means, we can do an episode next week where we talk about the failures of ergonomics. But you could also just go to your, Claude or GPT, or if you still use Ask Jeeves or Google or something, go to one of those
Yes.
old fogey search engines. But look up what ergonomics has done to the Turkish economy and the currency and the cost of living. I think the way that Trump's putting us on the course, it's ergonomics. If it's kind of like an American Brexit, if you will, from the global trade system.
Yeah, kind of.
I mean, Dylan, hasn't that been one of the clear lessons that the UK has learned post-Brexit, that they didn't really have the ability to chart their own course as much as they thought they would, that they didn't have all the power back once they excised themselves from the EU? They've been struggling since then.
I mean, you're not wrong, and I don't disagree, but the reason I hesitate to just jump right in there and agree is, first of all, most of the people who live in London didn't vote for Brexit. Most of the educated urban class in England had no interest in Brexit. It was a abandoned and disenfranchised northern rural voter that was susceptible to delusions or illusions of British primacy in a way that is almost identical to the rural American voter who is now vulnerable to illusions of American non-interdependence, I guess would be the most polite way to say it.
Because there's already American primacy, right?
I mean, America's primacy is a function of the fact that it is the dominant counterparty, it is the most connected place in the world. It is because it is the most connected place in the world that it is the most powerful country in the world, and it's the most connected place in the world because it is the reserve currency and because it is the reserve capital. It is the capital source for the world. And I won't reiterate all the things that it is, but technology, finance, entertainment, blah, blah, blah. And so it is a politically accessible and successful strategy to tell a disenfranchised minority that disconnecting from the other is ultimately going to be good for them. But it's also explicitly at the feet of the Democratic Party that they're so corrupt and incompetent and incapable that instead of fielding even a marginally viable candidate, they thought that they could run a senile man who would then handpick someone that no one wanted. And so I think it's easy to pick on Trump and for good reason, but I put Trump's existence at the feet of the Democratic Party more than I do anything else, because 80% of the available voting pool didn't vote for Trump in the first place. So this whole idea that there's this big Trump wave is bullshit. 22% of the available voters voted for the guy. 78% of the people either didn't vote or voted for someone else. So the entire construct is frustrating for me because it perpetuates the false belief that America wants this, which America wants this as much as any dictatorship wants a dictator. It's a minority that has seized power, and the reason they were able to seize power is because of the egregious corruption in the Democratic Party, which made a fuck you candidate more attractive. And so that's what we've got.
Yeah, if I could just opine on that for a little bit, I think that's a common point that I've had talks with many Democrats over the past few months. They're like, it was just the messaging, it's just this. Like, no, guys, if you think that Trump was this uniquely unpopular of a person, what does it say about the candidates that Democrats are running out that you guys lost to this uniquely unpopular person? It must mean that you are even more unpopular. David Shore, who is one of the Democratic Party's big data guys, he looked at crosstabs from the 2024 election, Dylan, and I know that you say like, if Democrats only to get better candidates and turn people out, they would have had a better chance. That's not what the data suggests. The data suggests that lower turnouts actually help Democrats now because of the shifts in the voter composition. And the Trump coalition coming out of 2024 on a voter basis resembles the Obama 2008 coalition more than his 2016 winning set of voters. And so when you have a coalition that's like Obama 2008 or Trump 2024, the higher the turnout, the more people you're getting involved who are seemingly are politically disengaged and aren't following the news day to day. And if you're not following the news day to day, what's your interaction with politics? High gas prices, high grocery prices, high insurance prices, cost of living's out of control. And so you look up on the election day, who's in charge right now? Get him out of power, right? So the disengaged voter actually, like more people voting last election, would have probably meant a bigger Trump landslide. And that's again, I don't see many Democrats outside of the data scientists looking at the numbers and making that suggestion. So Trump is a uniquely popular president. And that's, I think, difficult for a lot of people to stomach. And it's, not comfortable for people who don't like him to say.
Well, and this is the dichotomy, right? A lot of what the campaign was about style. Well, look at the style over here, look at the style over there. And the Democratic argument seemed to be, well, that style over there is disagreeable. This style over here is agreeable. And I think what you get in the results, actually, Jon Stewart, I think, made this point better than anyone, but of course, everybody has since kind of picked up on the phrasing. What Trump has been really good at, to sort of make the Brexit analog, is to identify what the source of discontent is, to identify the issue, to diagnose the mood correctly, but then to provide solutions, or at least proposals for solutions, that nobody likes and that are probably disastrous, as we now see with the way that these tariff situations, the DOGE process, the immigration process, with the way that it's being interpreted by business and consumer confidence, and with the market response to those interpretations, which are universally dire. So this is not us speculating on the quality of the president's ideas. This is what the markets and consumers and business people have made of the execution of those ideas so far. So there's two things at work here. On the one hand, the assessment of what the pain points are clearly is correct, because clearly the voters were not upset at the tone nearly as much as they were upset at the scoreboard. And they had a very particular interpretation of the scoreboard economically, politically, socially. And the president seemed to have dialed in on sort of what is the point of maximum discontent amongst most people. But if you look at business confidence and consumer confidence numbers, there's clearly a ton of buyer's remorse. And the markets are reflecting that.
I don't know if the markets would call it buyer's remorse, right? If Trump was just doing Trump 1.0 right now, we'd be probably thinking about
that's the thing. If
a 6400 S&P.
Well, hence the buyer's remorse. Right? Yes, I think you're absolutely right. I think if the markets were worried about tariffs as a concept and an immigration crackdown as a concept and government efficiency and the slashing of bureaucracy as a concept, we would have these things be drivers for sell-offs in November at the absolute latest, once the results were in. That's obviously not the case. I don't think anybody thought that the concepts were necessarily objectionable. I think what now is starting to show up as of late February, when sentiment across consumers and businesses starts to deteriorate around the rollout, that's where this becomes real. That's where the buyer's remorse comes. When people look at the execution, you can put your meme of Jim Cramer grabbing his head on CNN and shaking it vigorously. This is where the buyer's remorse is. It's in the execution, and that I think speaks still further to the idea that the analysis of the issue was probably spot on. At least, I mean, we can quibble as to whether there is the issues that people think that there are. But what people think the issues are was probably diagnosed correctly. It's the execution that has everybody upset.
Dylan, some of the China-sensitive names are struggling here as we look at the, retail, for example. Retail ETF, it is up, but a name like Amazon is down. The sector performance across the board today was still very defensive in, considering it was a mixed market day here. But in terms of the top sector performance, one needs to look no further than what's happening in the energy sector right now. Crude oil, obviously, having a very strong day here, up 2.94% right now, back to its 1-month moving average. But you have some of the energy ETFs leading the way higher: XLE, OIH, XOP. OIH is your top performer, up 3.56%. You also see that staples are up there, and utilities, and they're both outperforming the broader market here. So, Ilya, when you look at today's bounce, you look at the composition of this rally, or stutter step, if you will. Although we can't trade tomorrow because this is basically a Synthetic Friday episode of Overtime. How do you feel about going into next week knowing that there are 3 very, very long days ahead before the futures market reopens?
I'm not changing anything. So I was a little bit concerned about my dollar shorts going into the ECB, thinking that maybe the ECB would take some steam out of the euro with a rate cut and with dovish rhetoric, and that would spill out into a more generalized U.S. dollar rebound if the move were big enough, because the euro is, of course, such a huge part of the overall dollar market. In fact, the euro-U.S. dollar exchange rate is possibly the most liquid financial instrument in the known universe. But that didn't happen. The euro very impressively held up. Lagarde came out there all kinds of dovish, and that really didn't seem to move the needle for anyone. And so as I look now at what's left, it doesn't really seem like there is a sense of urgency to do much of anything. It seems like the markets are getting ready to go into the end of the week with not a whole lot of conviction. The only moves we see, in fact, are in the bonds, and they're all happening at the longer end. So the 2-year barely changed, the 10-year down a little, the 30-year down more. All of that just tells me we're going into a long weekend, to your point. Lots of things can get posted on Truth Social between now and next week. Lots and lots of markets will be off for Easter Monday. So those closures will continue in Europe and in a lot of parts of Asia Pacific, let's say. And so liquidity is going to be really thin at the weekly open. Things can get really choppy until the U.S. comes online. The bonds move today just tells me people baked in more term premium into yields and decided to go on vacation because nothing else is moving. So I'm staying long bonds. I'm staying short dollars. I'm a little bit short the Russell. That's it. I don't think there's any reason to touch anything.
Do you look at the move in oil as just a bounce off of a price extreme, or an actual adjustment in the economic pessimism that was embedded in that sell-off?
I think right now the easier explanation is that it's a bounce off an extreme, because if you take a look at the chart here, you can see, and Chris, I think you've got the line I'm looking at right there. We're testing the underside of what was a break downward. I think this is more about a loss of desire for conviction. And the market's just saying, you know what, we're not going to mess around with anything extreme here. Moreover, I think if you look at the calendar for today, you have a little bit of an explanation for what's going on here. The EIA numbers were out earlier this week. I think you got a little bit of a impetus there. And so, I mean, pretty negative inventory numbers across the board. A much smaller build than the previous one, and generally for refined products, inventories down. So we didn't have a response on it on the day of. This seems like maybe is a response to it before the end of the week to just kind of clear the decks, price in the data, and then go into next week with whatever's new. There doesn't really seem to be a very compelling reason looking at crude oil here to think, oh, I'm going to extrapolate this higher. Now, if you take out the previous swing lows from March and you get back over that, okay, maybe you have more of a conversation, at least to the top of the range around, let's say, 71. But even if you thought that was going to happen, the risk reward, now that you're kissing the underside of the lows, is awful. You're basically nose up against resistance. So it doesn't even look like a trade.
I think maybe it's the optionality around this weekend's meeting in Rome, Dylan. The Trump administration and the Ayatollah regime are sending people to go meet in Rome to talk about a nuclear deal. The Trump administration has repeatedly said that it's either deal or bombs. And so as we head into a weekend,
it's a fun way to say it.
Weekend where there's clearly something at stake here, seems like a decent hedge, right? You want to keep all your other risky stuff on? Buy some oil. Put a little oil in your pocket before the holiday. It's the worst that happens, right? As for me, yesterday on Futures Power Hour, Thomas and I were talking about this, how we were nearing the break-even rates for existing oil wells. And so we both put on short put spreads. Obviously, this is working out well for right now, short the 56, 58 put spread. This is a place where, quite frankly, if you're not comfortable holding risk into the weekend, it's as good a place as ever to get out. Former low that you have in September, lows that you have in March. Got a few minutes left to make some trades. We see here that we're talking about the 1 month moving average up at 68.07. It's pretty clean, depending upon what contract you're looking at. But otherwise, oil, I think, has some optionality around this meeting this weekend. Dylan, why Rome? Why not Vienna? Why not a place where OPEC has some cachet? Why would the U.S. and Iran meet in Rome? Not that it doesn't even matter. Am I just talking out loud?
I mean, the only reason that I could think is, for whatever reason, the Trump administration is going out of its way to elevate Italian leadership, because I think that it believes that Italian power and Italian leadership is the most reliably conservative and obedient to the Trump agenda. I think that they feel that the rest of Europe is defiant, indifferent, or disdainful of the Trump administration. And I think they feel like Prime Minister Meloni and by proxy Rome is the one aligned nation with the Trump agenda, at least culturally. It's a safe cultural location for the Americans, and it's also the most beautiful city on earth. Probably doesn't hurt.
Well, it's probably also.
But I do think that there's
I mean, to your point, Dylan, it's probably the friendliest of the important and influential ones. Because I mean, if it was the absolute friendliest, they'd be going to Budapest or something like this.
Maybe at Hungary, yeah.
Yeah, but that they're going to
that's
Rome.
A second-rate operation.
Yeah. I think, to your point, this is, and I mean, you've been very bullish on Giorgia Meloni, and I think rightly. It sort of speaks to her competence and importance that they would have this in her house, and that sandbox. She would be in Washington basically the day before.
No, they're clearly elevating the Meloni. The Trump administration has made the decision to elevate Meloni from the get-go, right down to being, I think she was the only one of the big four European nations that was even invited to the inauguration.
Which might actually bode well for Ukraine, because unlike, let's say, Viktor Orban in Hungary, she is a tremendous Ukraine hawk.
That's for sure.
Is there a China angle here?
Maybe.
Could I chew on an idea that 44% of China's oil imports come from the Persian Gulf? And if the U.S. really wants to turn the screws on China, then having American warships conducting military activities against Iran might kill two birds with one stone. I know that Trump said that he turned down an Israeli request for an invasion and attack a few weeks ago. And that information was made public today ahead of the meeting on Saturday in Rome. Draw the straight line. Trump's clearly trying to stake out, like, listen, I want to get a deal done here. Cop. It's actually very smart messaging. Yeah. It's very smart framing, right? We released this story. We know we have a meeting coming. Oh, by the way, in the news, we stopped an attack against you guys. We really wanted you dead. If these talks weren't meant to be constructive, we just let Israel bomb the hell out of you. So it's a very smart framing to put the meeting on better terms, but it also means there's a gun being held to Iran's head here, where if they don't come to an agreement. I don't think Trump is going to shy away from that, though. You want to upend the Chinese economy right now while it's refusing to call Trump, disrupt the flow of oil. So I have my long crude position on here, if only for that. The volatility is too high just to justify buying deep out of the money calls right now. So short put spread works for me. I still think that we need to worry about this geopolitical risk. And fortunately, we finally have some vol in here to operate around.
You know what, though? What's been this is hilarious to think about as you're talking. What's been the problem for China's economy really since before it lifted COVID restrictions and thereafter? It has been a persistent deflationary spiral. There is no demand to speak of. It's really interesting, of course, we just got data this week, surge in industrial production, but that surge in industrial production and to some extent a surge in retail sales, both of those come after you get trade data this week showing imports are cratering and exports are rallying, as if to tell you this is all front running of tariffs. Moreover, you look at the bank deposit data that I like to follow in China, and you see more and more money flowing to longer-term savings accounts, time deposits, than demand deposits, that is money earmarked for consumption now. So all of this looks like a fake rise in retail sales thanks to the government's stimulus program encouraging swaps of appliances and things. That's not new consumption. That's swaps of appliances. You swap your refrigerator, now you have a new one. That's it. End of story. If you don't have any more confidence, the story's done. Okay. Then you have this surge in industrial production and in exports. Okay, people are front running the tariffs. That makes sense. That's going to go away now that the tariffs have actually been levied. How do you get China's economy moving, though? Well, one way is you could jack up the price of oil, create inflation, make everything more expensive, and spur a rush of consumers to try to front run that inflation, and of course then to just amplify it, which is precisely the solution or a solution to the problem that has bedeviled China really since 2021, which is nobody is buying anything.
So Trump tries to turn the screws on Iran by blockading the Persian Gulf as we attack Iran with Israel, and China says thank you because we finally get a spark in our economy that we've been looking for.
We get our consumers to buy stuff because prices start going up.
I don't know if I agree with that, Dylan, but
it hurts later, but it helps in the front.
That's what makes this weekend so confounding. And I know it's like, oh, yeah, every day's been a long day because things are coming out of left field and the VIX is sitting at 30 still. So any day the VIX is at 30, it's going to be a long day. But also with this weekend, Dylan, right, we have all these exogenous events. We have Fed speakers the next few days. We have, obviously, Trump talking about firing Powell. We mentioned the other day that it seemed like Kevin Warsh is the person who's campaigning to be the next Fed chair. CNBC just reported this afternoon at 3:58 Eastern, so 2 minutes before he went on overtime, that Trump has talked to former Fed Governor Kevin Warsh about firing Powell and replacing him. So if we can figure that out here, this is not to pat ourselves on the back. The point is, why didn't today's Powell firing news get more traction? Yeah, because it's been as plain as daylight for anyone to see. This, of course, is where he's angling. He's been angling about this in the public for months. So the fact that it's coming out now, the day after Powell effectively says, we can't cook the stew that you want us to cook because you haven't told us what ingredients you want to go in there with any certitude, Powell's now on the chopping block. Maybe.
Excuse me.
Bless you. So, Dylan, we have all these headlines for this week, and I asked Ilya, is he going to approach things differently on the other side of the weekend? Obviously, you can put an asterisk on it. Who knows what's going to happen here? But assuming we start Monday with where we ended today, in terms of news flow, developments, lack of trade deals, how do you approach next week?
I think next week has more upside than downside. As I said, talking to Tom and Tony, I just think that I think all you have to do is look at the Trump tweet talking about the need to fire the Fed chief, and then look at the reaction to that, and specifically the absence thereof. And so now I think the market has made the new normal the fact that the president's going to change his mind constantly, make hyperbolic threats, and try to do things that are historically illegal to do. And that is the new normal. So now the odds are that at some point Trump may not do some of that. And that, to one of you was saying this, I can't remember whether it's Japan coming in, China coming in, Giorgia Meloni working magic from Rome, that there's a better pot odds of an upside surprise in terms of some sort of conciliation or reconciliation than there is the possibility of more chaos, if only because the market is now priced at a level is where, again, the expectation is that the president will say something chaotic and hostile every day. Yeah. And that's reflected in, that's why the dollar's been marked down. That's why the bonds are where they are. That's why the indexes are adjusted lower, blah, blah, blah.
Yeah, I mean, you do at some point get to a level of maximum pain that has been priced in. But
yeah, well, we're at the point where the market sees that we're not going to trade with China anymore.
Yeah, right.
Well, we're also at the point where the president says fire the Fed chief, and the market's like yawns.
Yeah, it's like, okay, sure, we're going to fire the Fed chief. We're also going to have reciprocal tariffs. Wait,
how do you even price? How do you even price that in? Firing the Fed chief. What do you do? Slap another 100 basis points on the Treasury yields? Right? Like, how do you actually price in firing?
How do you actually price that in? Well,
dollar goes down 10% in a day.
Yeah, dollar has a seriously, dollar has a double-digit down day. Yields surge. Stocks have maybe a 20% down day.
Gold goes to
gold goes to the moon. Yeah, and
that doesn't happen today.
No.
UNH had the biggest move today in the market, down 22.37%. It's obviously fascinating because it's complaining specifically about the increased costs it has with its Medicare Advantage program. So other companies that operate in a similar space were also being hit here. One thing that we need to be aware of, though, when we talk about the cost of insurance going up, right? Do we think that UNH is just going to eat these elevated insurance costs, Dylan, or are they going to pass along the cost to consumers with higher insurance premiums moving forward?
I mean, I think they will pass them along. I mean, come on.
Right. But this is what tariffs do. When tariffs are imposed, and I want to bring the big picture here to what the macro policy is, when tariffs are imposed, especially on imported goods like raw materials or industrial components, they are a tax on trade. You as the importer are paying for them. They raise the cost of doing business. And this isn't theoretical. This is just the hard dollar impact. So input costs are going up, profit margins are getting squeezed, and companies are forced to either eat the costs or pass them along to consumers. And more often than not, Dylan, they're going to pass them on. So, but what does this have to do with insurance? Insurance companies are operating in a world where they're currently and constantly pricing risk. That's why you have these insurance companies pulling out of places like Florida and California for climate issues. They have determined in their models that it's more likely than not that they are not able to recoup the cost of their investment. So not worth playing the game. But when you're constantly pricing in risk and you're constantly pricing in now a higher cost of goods sold, you're thinking of higher replacement costs of everything, higher costs for construction materials. There's delays in production. For insurers, because of the delays in production and rebuilding things, this translates into higher claim payouts in property and casualty insurance, greater exposure to business interruption, and more even volatile asset returns in their investment portfolio because they need a cash flow, liability, and duration match. So if costs are going up and volatility is increasing, what do these insurance companies need to do? They need to charge higher premiums. The tariffs are going to lead to higher insurance costs. It's just a function of math. So UNH today says the costs are going up. Do you think that UNH is going to be benevolent? Or do you think that UNH is going to squeeze the rest of us for this? They're going to squeeze the rest of us for this.
Sure.
Tariff increase input costs lead to increased replacement costs, which lead to increased insurer liabilities, which lead to higher premiums. This is how it's been for the last 50 years, 60 years, 70 years, Dylan. Why are people pretending like it's not going to be a huge issue now moving forward?
It is going to be. Why?
Should we get long war insurance companies here? They've done quite well this year.
Yeah, I mean, I think that's a rational consideration, actually. From a trading standpoint,
we talked about the fires, right?
I mean, the only thing that would hold you back is this idea that everything around the market is getting squeezed with more term premium, and insurance companies, much like a lot of other non-bank or shadow bank type of entities, are sitting on a giant pile of U.S. treasuries, which are sinking like a rock. So if you were concerned about SVB, this is another one. Let's not forget that where we really got worried about the 2008 crisis wasn't the fall of a bunch of investment banks, including Lehman. It was AIG and Munich Re and things like this. So and AIG, of course, first and foremost. The tentacles here are vast. The pool of dark bank lending is giant. And by the way, when we say dark, we're not saying it's insidious or anything like this. We're just saying that these are lenders that aren't formally banks. So private equity companies, insurers, things like this. These are institutions that lend people money, but that don't have to follow the rules of a formally declared bank in the way that they manage risk and hold capital and all of these things. So about the only thing that I would be worried about in that logic would be if there's a further squeeze down on the bonds because the uncertainty grows and rates keep nudging higher, a lot of this space is going to be exposed.
I understand that. It can cause balance sheet problems. But you also have to get insurance for certain things in this country, right? You're mandated to have certain kinds of insurance. By law, it kind of operates as a monopoly. If I could just give a little anecdote here, Dylan. Maybe one of the companies, I'm looking at the top holdings of IAK, which is the insurance ETF here. You have some decently liquid names, AIG, Travelers, Progressive, Chubb. I have Chubb insurance, okay? The people who fixed my floors, did the mold remediation, billed like $12,000 for it. Chubb went back and forth with them for the last few weeks, and I just got the confirmation that today the claim was paid out, and they whittled down the payment to $7,500. So when I think about an insurance company agreeing to pay for service and then telling the contractor, like, actually, we're going to give you about $5,000 less than we assumed, these people are fighting in the trenches to make sure that they don't pay out on any claims. They must be giving all the money back to the shareholders. Stock's reflecting it this year, 285 right now. It's been moving up slowly throughout 2025 when it started near 224. The top end of the insurance market right now is incredibly stable. I mean, Progressive had a not so good day today, but broadly speaking, these companies have been holding up. They're holding up better than anything else. I mean, the only names that are basically comparable right now are going to be all of the consumer defensives, the consumer staples, the Walmarts of the world, the Costcos, the Procter & Gamble's of the world. should we be a little bit more creative in our thinking here, Dylan? Like if costs are going to go up and we're going through a stagflation window right now, which is looking increasingly likely as every day goes by without any significant back down in this trade war, shouldn't we just have a stagflation basket on that's probably going to work for the next 5 years and operate in that
super
realm?
rational. Yeah, I think that. I mean, I don't disagree with anything you're saying.
The problem,
it just feels like we need to fundamentally
again,
change our investing and trading behavior, right? Like pretending that this is going to be a flash in the pan. We need to think 1970s investing style returns.
I mean, this is not a flash in the pan, clearly, and the markets are showing it to you. Otherwise, we wouldn't have this consternation. I mean, I was wrong to be short stocks last year a lot until this year where all of last year's rally got erased. So, ha ha ha. Not that I would have held it, of course, and not that it made sense to hold it. But the markets clearly are very concerned that this is not a flash in the pan. But the thing is, because it's not a flash in the pan, the markets are already looking through the inflationary impact and to the growth impact. Because when you look at break-even rates, and by the way, it's not just in the US, it's in Europe too. But if you look at the US break-evens, they are cratering. That's not an expectation that the tariffs will cause inflation. That's an expectation that the tariffs will cause prices to go up. That will cause an economic downturn, and the impact of the downturn, the demand destruction from the downturn, will be so bad that it will overwhelm the upside to prices from the tariffs, and the net effect will be lower inflation for all the wrong reasons. Firings, higher unemployment, you name it. So I don't know. I don't know if you want to be prepared for stagflation here. I like the stag, maybe not the flation.
Dylan, what was that company?
But I mean, do you not like the insurance basket for all the logic of Mr. Vecchio's opining?
I totally get the logic, and I think the logic might make sense, might make more sense after whatever sweep we have, because I think Chris is absolutely right. This is not a regime that's going to go away quickly. And so what the trade there might be is just a longer term idea that the inflation environment in general, probably for decades to come, is going to be higher than it was for the preceding 40, 50 years. And that's a bet that will have its winners and losers. The insurance companies probably look like they're on the winning side of it. But between then and now, there is maybe more just straight risk off selling without any regard for sector or industry, just de-risking.
Dylan, there was a company that you mentioned earlier this week as being a potential place to look. Eli Lilly was up 14.3% today. They just announced that their GLP-1 drug can now be administered orally through pills, no longer through shots. Full disclosure, longtime Eli Lilly shareholder. Thank you, Mr. Robot, for telling me how bad of a company it was. That was a good counterculture signal. $840 now here. Seriously, like my best investing ideas are always for the dumbest reasons. Like I'm either the guy in the meme at the very left side of the curve that's drooling, or I'm at the very right end of the curve being like, this is a very idiotic idea. It's definitely going to work. Like I know, it's definitely. Dylan, you mentioned Eli Lilly, though. You talk about these manufacturers that make medical equipment here or drugs domestically are doing a little bit better on the other side of all of this. Even Johnson & Johnson here is recovering. It has a 2.3% bounce today. Another medical device manufacturer, AbbVie, up by 0.77%, outperforming the broader market and finding a little bit more stability. Instead of fighting this, Dylan, maybe we should just embrace it. You know, the world that we knew and love is gone. Globalization's dead. The balkanization of trade is here. And so we need to adjust our expectations for what sectors will perform well permanently moving forward. Although let me end on a different note, if I will. What if the reason Powell is so mad or rather Trump is so mad at Powell for not cutting rates is because Trump in the back of his head knows that this trade war is all BS. And he just wants to engineer a situation where he can just get the stock market through it before he finally announces all the de-escalation. I mean, if the inflation's coming, right? Shouldn't Trump be grateful that Powell isn't going to let a wave of inflation wreck his tenure as president? There's a lot to consider.
I think when you have the break-evens telling you that inflation expectations are collapsing, and the Fed chair tells you this week that the reason that they're worried is maybe the tariffs will have a longer-lasting upside to inflation expectations, and they're pointedly telling you that's not the direction that they're going, you're really just waiting for the next big piece of data to justify things. And if the next big piece, NFP didn't let you have it. Retail sales didn't let you have it. You need a piece of data to hang your hat on if you're the Fed, because you cannot let go of your credibility, because then inflation expectations really will go bonkers on you. The market has to believe what you're saying. So you get a bad piece of data, and then you can say, okay, now we're going to cut. And there's an off-ramp to the whole thing. To Dylan's point, with the president, you're the greatest, best person ever today, the worst one tomorrow, and the best one again the day after. The off-ramp seems simple, and the Fed wants to cut rates. It just needs a bad piece of data to do it.
Well, it's been another interesting week here. We don't have any trading tomorrow. Markets are closed, so Ilya, Dylan, and I will not be on air. To that end, if people are celebrating Passover, hope the celebration is going well. If you're celebrating Easter, hope you have a lovely time with your family. If you don't do any of those and I've offended you in saying have a good Easter or Passover, I apologize. I'm just, we're making this up as we go along, folks. So overtime's now out of time.
Tell you what, the lack of carbs is not helping my focus.
That's true. It's Thursday. We'll be back on Monday, same time, same place, right after last call, 4 p.m. Eastern, 3 Central. So for Dylan Radigan in Milan, Ilya Spivak in San Francisco, I've been Chris Vecchio in New York. See everyone soon. Have a nice weekend.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Woof! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Nikki Batt, University of Kansas. Number 20, because that's how many underlines are in my portfolio.
Rick Welch, Illinois Institute of Technology. Number 23, because I'm trained 23 hours a day.
Dr. Data, Louisiana State University. Number, square root of 1 over 365, because that's the square root of time for one day, which is multiplied times the stock price, multiplied times the implied volatility, which gets you the projected stock price for one day.
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
I bet you work a lot of hours.
Yes. I bet you can't guess how many hours a week I work.
Really? 60.
61.
Oh, God.
$1,000.
So
Boom!
close.
Oh,
So
my day
close.
is starting out great. Want to go double or nothing?
Let's see. What color are jeans?
Blue.
You got it!
Brilliant color of jeans. They write songs about it.
I thought it was tough.
Double. I win double.
Great job.
Yes, and you get nothing.
I'll pay you in love.
That's not how this one works.
I will pay you
No.
in hugs and kisses.
There is no hug and kiss worth $1 million. Cool.
I could make it worth $2 million.
I've kissed you before and it's not that good. Woo! This is what I love. Every time the game hurts you, she gives it right back to you.
What do you mean I don't kiss good?
You're awful. You're very mouthy. Man, this feels good. Oh, this is why I do it. All right, come on, let's keep going. I'm on a roll right now. What's the matter?
I didn't know I was mouthy.
You think it would be good, but it's not. You should practice more.
Okay, my turn.
Okay. Try to make a little money back?
Okay, you want to go big?
Yeah, let's go big.
I'll get it on this man's game. I'll get in this man's game.
Yes.
$5 million.
$5 million?
$5 million and a speedboat.
A speedboat?
Uh-huh.
This is serious. Yes, I'll take the bet.
Okay.
Oh, boy, here we go.
I bet I know the name of your childhood friend.
Nobody knows the name.
Really?
I never talk about him.
Oh, really?
Oh.
Lenny Cancelleri. Bam!
Woof! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Nikki Bat, University of Kansas. Number 20 because that's how many underlines are in my portfolio.
Rick Welch, Illinois Institute of Technology. Number 23 because I'm trained 23 hours a day.
Dr. Data, Louisiana State University. Number, square root of 1 over 365, because that's the square root of time for one day, which is multiplied times the stock price, multiplied times the implied volatility, which gets you the projected stock price for one day.
I like the looks of that lineup.
Well, being mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
Tom, when you're scooping the offer, what are you doing?
That means when you're scooping the offer, you are buying whatever you can get your hands on. So every resting order that's posted in the book up until a certain amount.
If you say take a fill, what's happening?
If I'm taking a fill, that means I'm a broker. And if I'm a broker, that means I did something horribly wrong because I'm a market maker.
It's a quiet day for the markets, despite another big raft of scary headlines. This time, U.S. President Donald Trump is openly threatening to fire Fed Chair Jerome Powell, something that, if the markets were to have believed it, would be no doubt a source of epic consternation. But as it turns out, the news passes with a whimper. And the markets head into what is a global deceleration of activity around the Good Friday and Easter Monday holidays, with, of course, Easter in the middle, seemingly taking hold and the markets kind of settling into a quiet drift. But that doesn't mean that things are actually quiet, and it certainly doesn't mean that we don't have a great big source of volatility brewing in the background. And so what we'll do here today on Macro Money is take a look at some of the data that has fallen through the cracks this week coming out of China, which at first blush might suggest they are all geared up to fight the trade war. I'm going to see if that's in fact the case, how the landscape presents itself. I'm Ilias Spivak, head of Global Macro here at Tasty Live. And what we're going to do first is just unpack some of the data that has come out this week. There was a big set of releases on the calendar, and they're all out at this point. We should get foreign direct investment numbers at some point over the weekend, but there isn't actually a time of release attached to them, so who knows when they'll be coming out. The data already on the menu looking somewhat impressive, at least at first blush, though, and seemingly suggesting that China is well positioned to resist Washington's offensive. Let's take a look at these numbers here. Exports surging. That's reported earlier in the week, 12.4%, though imports down again and more than expected, off 4.3%. We'll start to unpack this in just a second. Probably the most impactful number, GDP, the year-on-year rate, 5.4%, unchanged from the fourth quarter, but higher than the 5.1% expected, and blistering numbers for industrial production and retail sales. That perhaps one of the most eye-catching bits of this entire equation here. The number for industrial production, 7.7%, that's the highest since June of 2021, before China exited COVID restrictions. We sort of approached similar levels in January and February of 2022. Again, before those restrictions were over, that was about 7.5%. But clearly, numbers that are significantly stronger than recent history. Retail sales up 5.9%. That's the strongest since December of 2023. So heady numbers here, seemingly. But once we start to unpack them, the story may actually end up somewhat counterintuitive. And these large numbers may in fact be telling us just how concerned businesses are about the trade war's impact. So concerned, as a matter of fact, as to be aggressively front-running them. Now, of course, remember, these are first quarter numbers, so that they don't take in the actual full breadth of the tariff hit, which only is gathering pace in its kind of full and complete impact. Maybe it can, of course, be escalation, but April has really been the timeline for where things have really become spicy here. We are not seeing the full impact of this yet, but looking at the breakdown of GDP, we can see that even going all the way back to the second half of last year, we don't have the full breakdown here for the first quarter just yet, but we can already clearly see in the third and fourth quarter this growing contribution from net exports to overall GDP. And we can see that the final consumption contribution has actually shrunk significantly all the way after this COVID reopening. So the reopening happens right here in the tail end of 2022. The first quarter of 2023, you see that impact with a massive addition from consumption. That has whittled down to very little at all. Capital formation, that is investment, measure of business confidence, has also shrunk significantly. And as we look at the increasing share of exports, even as, especially in the fourth quarter here, you have increasingly combative rhetoric. And of course, now you know who the president is going to be in the U.S., there seems to be this sense that you have a reason to front run whatever tariffs might be coming. Of course, at that point, you don't know what they're going to be. But you do know that they're coming because they're a feature of the president's campaign repeatedly over and over and over again, and now he's won. So the idea is, well, costs are probably going up, so buy as much as you possibly can now before they do. And that seems to speak to what this surge in net exports contribution to growth is telling us. Now, while we don't know that this is a situation that was exacerbated in the first quarter, again, looking at those trade numbers, that is a fair bet. Because, of course, as we can see here, export growth is accelerating. Meanwhile, imports are not just going lower, but they're already below zero. So not only are imports diverging from where exports are going here, basically since the middle of last year, but imports are actually shrinking, and at a nearly double-digit pace. Of course, the latest numbers here increasingly so in this direction, imports down 4.3%. That's, of course, not as much as 8.4 in the prior month, but the trend is unmistakable. And so with this in mind, you would, of course, surmise, okay, what is net exports? It's exports minus imports. So you would expect that this state of affairs very much continues into the first quarter and helps to account for this strength. Moreover, it also helps to explain how you have this jump in industrial production. Again, the highest since we were north of 8% back here. Okay, well then what about retail sales? Let's say we can explain away industrial production as front-running the tariffs. What about this jump in retail sales? Surely that means that maybe the consumption component is finally starting to build momentum. And indeed, if we take a look at the internals here, it does seem like there's been a genuine pop in consumption, but why that pop has occurred, of course, matters a great deal. You know that one of the biggest sort of efforts, one of the loudest efforts in China's assorted stimulus measures has been this trade-in program to try to subsidize consumers to swap out older comms equipment, appliances, and furniture for new ones. And we can see very clearly that as we head into 2025 here from 20 to 24, that has given a very significant lift. Indeed, the swap seems to be actually encouraging some activity. But is this activity you can bank on? Well, ostensibly, you swap out your refrigerator and now you're done. You swap out whatever other household appliance or whatever piece of furniture you were looking to replace, and then that's it. This is not an on-ramp, seemingly, for ongoing consumer confidence. And indeed, if we take a look at where we are here on that score, we can clearly see that there's still this widening gap between money heading for so-called time deposits, that is basically savings accounts or CDs, where the presumption is the money is going to be held for a longer period of time, earn more interest, but then be less liquid. And so the idea is this is savings. And then there's, of course, demand deposits, the money that's basically in a checking account and earmarked for near-term spending. Well, you can see that the ratio between these two, which is what we have down here, has kind of oscillated in a stable range all the way back from the global financial crisis into COVID. But once you get COVID, you get this massive increase in money flowing into time deposits relative to demand deposits, and the ratio is approaching almost 3-to-1. That is to say, about 3 times the money going to accounts earmarked for consumption is getting packed away in savings. This is not a picture of consumers that want to be spending money. And so, yes, you might have a retail sales lift here for some amount of time. Of course, it isn't anything like the jumps that we saw even as recently as 2023. This is that reopening jump right here in the first quarter. But since then, retail sales has generally cooled. That makes sense. But this pop right here, much as it seems to be well supported, is just that. It is a pop. It isn't something with runway to continue. And of course, that, at least in general, sort of spiritual terms, as it were, lines up very much with what we're seeing from this jump in industrial production. And that, likewise, to the extent that it is a front-running of the tariffs rather than some sort of a true recovery in demand, that again looks like a flash in the pan kind of a situation rather than something with forecastable scope for continued movement in the same direction. Now, ostensibly, we might see more of the front running. We might see more of an uplift from these incentive programs that China has introduced, but all that's well and good. It's just not the kind of thing that prepares you for a mounting trade war, because it is inherently temporary. And once the tariffs really start to hit, the front running ends and the mood continues to sour. This, of course, speaks to the issue that China has had really since the COVID reopening. And again, here's that telltale moment here at the start of 2023 where you get the last kind of gasp of growth as you get that reopening. And since then, we can see China's economy has basically flatlined. Moreover, the most jarring part of this, as we've talked about extensively before, is that real GDP, that's the darker line here, is running above nominal GDP. That's the lighter line here. And this is the spread. I used different axes here just to show the spread more clearly. You can see here that we're looking at a gap here of about, give or take, 1 percentage point of GDP growth, which is a staggering amount. Because what this implies is an economy-wide deflationary spiral. If real GDP is running north of nominal GDP, and nominal GDP is by definition real GDP plus inflation, well, then nominal should be above real as long as inflation is positive. But if inflation is negative, that's how you get real running above nominal. That is to say, nominal becomes real plus negative inflation. And what you end up with is nominal being discounted by inflation, not have an inflation premium. And of course, that's really the essence of the issue. If prices are falling, if there is in fact deflation, now for 7, maybe 8 consecutive quarters, we don't have the nominal GDP numbers here, but we'll get to estimating them in a second. We have a situation where China is basically relegated to the bargain bin. If there is demand in the economy, well, then people buy things, and that buying of things drives the price of those things higher, as that demand pulls on, at least for the moment, finite supply, and competes on price to get it. So the price of things goes up. Well, what happens if the price of things isn't going up? Well, it tells you there's no demand. And prices need to fall to try to entice it. And what we're looking at now is close to 8 consecutive quarters where that's not working and prices keep falling and demand remains absent. China is effectively an economy that's attempting to discount its way back to bringing demand to life, and so far, no dice. Now, again, we don't have the nominal GDP numbers here for the first quarter. The real GDP numbers just came out, so we don't have the nominal ones to make the spread calculation here, but we can look at what's been happening with CPI and PPI so far in the first quarter, and we can see that the direction is toward weaker inflation, not stronger, essentially hovering on the lower side of proximity to zero for consumer prices, and the situation in producer prices has only become more negative. It's, of course, been negative since 2022 here, since the middle of that year, and it's never really become very much better. But we can see here that it's actually appearing to deteriorate most recently. So the likeliest scenario seems to be that this situation might have actually become worse, not better, when these numbers are updated. Moreover, the stimulus that China has rolled out is plainly not working. We can see here the share of new loans in GDP continues to be falling. So the Bloomberg Credit Impulse Index here still very much in negative territory. Now, the pace of decline seems to have eased a little bit over recent months, but that's not really much of a positive story. It just tells you that perhaps in year-on-year terms, the situation is not getting meaningfully worse, but of course it also doesn't suggest anything about it getting meaningfully better. So all of the inducements that China has introduced, including, by the way, that trade-in program, are plainly not stoking more credit and more borrowing activity, which, of course, is their aim in trying to revive the economy. Furthermore, and we'll get an update on these numbers maybe over the weekend, foreign direct investment continues to fall at a pace measured in the double digits. So we're again, as of the latest numbers, approaching 20% year-on-year declines, suggesting that capital is pouring out of China as though a ruptured water main. This is a very rapid exodus of capital. And so the situation seems to be that China's economy remains anemic. There's, besides the headline GDP numbers, under the surface, all of the underlying weakness we've seen in recent quarters. None of it seems to be getting particularly improved. And at the same time, the stimulus efforts that have been attempted seemingly not doing much of anything. And so this doesn't really paint us a picture of an economy that's ready for a trade war that now implies tariffs of as much as 145% from the U.S. China, of course, has retaliated with its own tariffs, and that's been an interesting conversation because all of the countries that got a reprieve on reciprocal tariffs above 10% were the ones that didn't retaliate, and or at least walked it back quickly in the case of the European Union. In the case of China, they did not. They've retaliated. In fact, most recently on April 11th, they increased tariffs on goods to the from the U.S. into China to 125%. It's not a huge It's not going to make a huge difference because of the trade imbalance, but nevertheless, China appears to be fighting back. But the structure of the economy does not seem to suggest they have a whole lot of runway. Moreover, their ability to counter is significantly diminished by their own actions in divesting from their holdings of U.S. treasuries. A lot has been made in recent days of this idea that the reason that the U.S. treasury market is suffering to this extent is because China is actually fighting back against the trade war by selling off their treasury holdings and driving up yields. That this is then creating a potent headwind for the U.S. economy. But what you actually find here is that China has been slowly divesting out of U.S. assets, basically going all the way back to 2010, 2012. 2011 seems to have been the peak. Things held steady until about 2012, 2013. And since then, there has been a steady reduction in China's holdings of U.S. treasuries. And if we look at where those holdings are relative to total outstanding U.S. debt, we're talking about a return back to about 3%, even a little bit less, of overall U.S. debt outstanding. So the lever here does not seem to be particularly potent. Instead, the rise in U.S. Treasury yield seems more about surging term premium. That is, the market's demanding compensation for duration risk around all of this uncertainty in the U.S. It seems to be more a self-inflicted wound than anything that China could have scope to do, considering how little impact they now have on the overall mass of treasuries and the amount that they would need to sell and things that they would need to do to really unwind things to have a meaningful impact. So if we learned anything about this situation this week, it is that the president has mentioned he would like to make a deal with China just today as he was meeting with Italian Prime Minister Giorgia Meloni and having a press outing. He said as much directly. Meanwhile, China has apparently laid out its willingness to strike a deal. And so if anything, what all of this suggests is maybe the trade war is heading into a place of de-escalation rather than escalation in the relatively forecastable future, and not because the U.S. is eager to make a deal, but because economic data, headline readings notwithstanding, China's economy is hardly in a position to add a still more aggressive headwind into the mix of troubles it's already dealing with. And that is Macro Money for today. As ever, we are here Monday through Thursday, right after overtime, a show that I co-host with Chris Vecchio and Dylan Radigan, looking at the Wall Street close and where things may go there from. I'll be back for all of that next week. Also, Future Power Hour with myself and Chris is Mondays and Fridays. I'm on with Victor Jones for The Price of Truth on Tuesdays, on with Victor and Tom for First Call on Sundays, writing for the News and Insights portion of tastylive.com and commenting at Ilya Spivak on the platform formerly known as Twitter and on Blue Sky. If you're watching on YouTube, like and subscribe. Macro Money is back next week. Happy trading.
What happens when two titans of trading come together to harness the power of their prowess? Let's watch these two master the art of the noble sport boxing. Wow, look at those geriatric thumbs go. Someone had an extra dose of fibre this morning. Like a flutter of fills, it's definitely fists of plastic fury over here. And I'm spent. Well, lucky for us, Tom and TP are better at writing than they are almost anything else. Subscribe to Tasty Live Cherry Bomb to get piping hot takes on the market delivered right to your inbox. Sign up at tastylive.com/newsletters.
Trading is hard enough. Here's what liquidity is. You want to be like water. Liquidity is in reference to how easily you can get in and out of a position, from volume to open interest to actual price at which you can buy or sell your position. It's important for all traders, from stock traders to futures traders to options traders or even crypto. Tight bid-ask spreads and high volume are characteristics of good liquidity.
If you missed the live show, here's our cherry on top weekly recap.
You're making it seem I want to go.
I know you do. I know you do. Listen, there's a lot of things I want to do too.
I'll be the
night last night. I didn't have it in me. But back in the day, I could do it. I'm older now. You know.
Omaha.
Hold on. What did you want to do last night? I missed that.
Don't repeat that. No.
No. What did you want to do?
I do this every time I'm here.
I just want to know what
every time I'm
what did
here,
he say
we gotta
he
go down
wanted to
this
do?
road.
What did he say he wanted to do?
Do you need me? Do you want me to?
Because usually when he wants to do something, he just said, she says, go in the and do. Here you go. Here's the. Yeah, get in the. See you later.
Nick is gonna be sick.
The last 3 weeks I've been on this show on Wednesdays, it's gone down this rabbit hole.
Nikki's about to throw up.
What do you want me to do? I got 3 old guys talking about. Like, what do you want me to do?
Nikki's about to throw
the
up.
The thought of you guys is like sickening. I'm sitting here like this, like, oh God. It's hot as hell in here. I'm like sweating, like it smells.
I'm AJ Rudolph. I'm a senior product manager here at Tasty Trade, and I just qualified for the World Poker Tour $5 million free roll in Las Vegas on Friday. So I've been playing poker for about 20 years, actually. I started just with friends. It was like 2005, I think it was, where everybody was like, yes, let's go play poker. There was a huge boom around poker. And I actually feel like that is coming back around again. Right now, there seems to be a lot of interest, and the fields are growing, and everybody wants to get in there, and everybody has a chance to win. That's kind of the cool thing about all of these big events. I feel really privileged that I have the opportunity to go and do this. This particular tournament is only 2,000 people. You cannot buy your way into it. You have to win in order to win your seat, and that's what I did. And so I just buckled in and played my game and really focused and won my seat. I'm a very aggressive player. I do rely very heavily on reading the players at the table. I think that's super important. To be a balanced player, you want to make sure you're doing the math, you're reading the people, and you're doing all of those things in combination with each other, so that way you're using all the tools that are available to you.
You hear it all the time. Spoos up or spoos down. What exactly does that mean? Spoos is a slang term for the S&P 500, specifically the S&P 500 futures contract /ES. It's the world's most liquid asset. In the S&P 500, billions and billions of dollars trade hands each day. The S&P 500 represents the top US stocks, all in one basket, traded through one contract. The S&P 500's movement day to day gives you a good overview of the market as a whole and what it's doing.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
What is going on, everybody, and welcome back to Risk and Reward with Ian Gus. Gus, before we even get into it, I love the collar for today. What do we got? What do we got there? Give us a breakdown of the fit for the day. What is that? It's yellow.
Yeah, so this is my short week, my synthetic Friday T-shirt. Little cause for celebration. This one, it's William Murray, which is Bill Murray's golf brand. Highly recommend. These are like the most comfortable shirts I own. But this one has cocktails, lemons, and some guys hitting golf balls. I think I
like that.
Some umbrellas in there too, and tees and whatnot. But this one, it's a fun one, little Thursday short week shirt.
You're already forming the guy that has the different types of shirts. That's what I'm already getting the vibe.
Actually, as I was putting this on today, I was like, I can't build this reputation. I can't afford to have.
I think you already did.
I can't afford to have this
right
reputation.
Next to you. It's too late. The stash, the different shirts, it's too late, brother. But I know today we're going to be getting a little bit into the new Minecraft movie. Going to be touching on Warner Bros. They're underlying a little bit. As for today, shorter week in the market. Going to be a longer weekend. We got Good Friday tomorrow, so make sure you adjust alarms if you need to. If your platform is frozen, you don't need to refresh it because the market's going to be closed. But we'll dive into all of that. Some of the positions are doing a little bit better today. Had Vol coming in on some more positions. The lift position for the risk of the week is going decently well so far. It's not too volatile, but we have the zebra position on there. So I have not been forced to manage that position yet. So overall, a little bit more of a quiet day, but great overall. Can we get a little recap for you, Gus? How we doing? Where we sitting at right now?
Yeah, I'm feeling about the same. I'm blessed that the Nvidia position that I was sweating all week did wind up getting home for max profit. So shout out to Nvidia.
That's crazy.
Jensen did hear my prayers live on air yesterday. We were very close this morning. It was like $100.40.
That's the second time, is it not? You did that twice with Nvidia, if I'm not mistaken. Maybe I'm mistaken with another underlying.
Maybe it's a different underlying. I definitely have had a few come right down to the wire, and it's funny because it's like that, like the expected move. Like there it is. It happened.
Right.
Right. But yeah, and then TNA trade, my risk of the week from Tuesday, small cap ETF. This thing is absolutely booming, and it's really just due to like slight vol increase. And I have the thing happening, which I'm sure everybody's familiar with if you've ever done this. But sometimes if you take any sort of complex option strategy a ways out, like in this case, I'm 183 DTE on these two. What are these? These are these call spreads, bull call spreads.
Yeah.
And both of the premiums are moving in the same direction. Like it's supposed to be one offsetting the other, but sometimes you'll catch when the expiration is far enough out. Sometimes all of a sudden you'll catch they both go green, and so that's what happened today. Is both my short call and my long call on the same underlying are both green at the same time on the same day. So a little bit inflated there, but yeah, it's been a good day for me as well. Seems like I don't know, maybe are finding some kind of stability here, but with all the earnings coming up next week, that might shake things right back up.
Man, I love that you came out of that one with NVIDIA, especially with all the talk this week going on with the tariffs, China, US, NVIDIA being in the middle of that. So that's dope that position worked out, especially with the volatility we've seen in NVIDIA. So TN, what was the risk of the week for this week again?
TNA, which is a 3x leverage small cap ETF. And the risk of the week itself is at exactly break even.
There we go.
I have made no ground.
There we go. Laidback said, I saw you sweating yesterday. I was sweating a little bit for you too yesterday, but I'm glad it worked out. NVIDIA really pulling through for you. So Warner Bros. Big bet on Minecraft. When were you playing Minecraft for the first time, Gus? I know this is one of those games, one of those topics that we all probably had a little bit of experience with within the last 10, 20 years, maybe. When did you first get into it? When did you first hear about Minecraft? Did you like it? Did you enjoy it? What are your thoughts on it?
Oh, yeah. Minecraft was probably the first video game that I truly no-lifed, was Minecraft Xbox 360 edition.
Truly no-life.
Yeah, I mean, that was like the first video game that was for real. Like get home from school, throw my bags down and sit on the Xbox until I have to get off, until my mom yells at me, until whatever happens.
Yeah.
But yeah, fourth grade I think is about right.
Really?
Yeah, fourth grade. I was 10 or 11, something in that vein.
Yeah, but it was on a console when you first got into it.
Correct. I got into it on console because that was all I had access to. PC was still the primary way to access it at the time. But yeah, and then of course, Captain Sparkles, and I don't want to list any of the other YouTubers I watch because it seems like half of those Minecraft YouTubers have scandals these days, and I don't know who's who in that ensemble, but I know Captain Sparkles is still chugging. So shout out Jordan Marin, my goat.
Yeah, no, I love that. I just asked too because I remember I got onto the consoles a little bit later, checked out Minecraft, but my first experience with Minecraft was actually on an iPod Touch, an iPod 4 to be
the Pocket
exact. I was in
Edition?
about six, the
Yeah.
Pocket Edition. I was in 6th grade. I remember I would go to work with one of my parents one time and I would connect to their Wi-Fi and I would just like be grinding over there on that little iPod, just building like ships, like building little things that never really panned out and never really finished those projects. But I remember first getting into that, just overheating in my hand, going ham on that little iPod. But
Yeah, I
first
can
experience with it. Yeah, 100%.
Yeah, and that
100%. But
Pocket
what do we
Edition,
got here
I
today?
remember like 2 years after the fact, I discovered Pocket Edition, and I was like, what do you mean you can play Minecraft on the go? But anyway, yeah, today we're talking...
Did you have an iPod or anything of the sort to even get the Pocket
Yeah,
Edition?
I had an
use it?
iPod Touch around that time, and I eventually did get Pocket Edition, but I was already kind of spoiled once I had been playing it on console. It felt like it was like clunkier, so I didn't get much use out of it. But I would always be jealous, like on the way to a field trip, some kid would whip their iPod Touch out and be playing Minecraft.
Lastly, before we do get into this, I think I do remember downloading a lot of those applications. Does anybody here, you in chat, remember jailbreaking an iPhone or an iPod? Oh my! I felt like
you've never broken a jailbroken an iPod, man. You're not living. Oh man.
You know what I felt like? I felt like one of those guys in the middle of the night with my hoodie on, like I'm getting behind the mainframe and firewall. Like that's what it felt like when you were jailbreaking an iPod. But anyways, that was around the same time. What do we got right here? A culture phenomenon with Minecraft. What does this tell us?
Yeah, we're talking Warner Bros. We're talking Minecraft movie, and this isn't just a kids movie. This is a $160 million test of whether Warner Bros. Deserves a buy, and Minecraft is holding the controller. Let's talk about it. First and foremost, we got to establish the gravity of Minecraft here. It is a cultural phenomenon unlike any other. It's the best-selling video game of all time, over 300 million copies sold globally, which is kind of crazy to conceptualize. That's getting close to the population of America. And Warner Bros. Has bet big on it here, rolling out the Minecraft movie. If you're on social media, I'm sure you've seen at least something about it. It has been quite the social media phenomenon as well. It's got a loaded cast: Jack Black, Jason Momoa, Emma Myers, and importantly, the pool spans generations. You have millennials and Gen Z who want to see this movie. They're driven by nostalgia, like we were just talking about. We both just got nostalgic, citing the first time that we played Minecraft. Gen Alpha still plays Minecraft right now. They're obsessed with the meme culture that's surrounding this movie, and beyond that, Gen X, a lot of who are still parents of some of these Gen Alpha and Gen Z kids are having to go take their kids to this movie. So it really has been a bridge in cultures, and it has become quite a trend to go absolutely ape when the chicken jockey scene plays in this movie. I'll let Arrow cue this up now. This is here's an example. Perhaps the most pronounced. No sound on this video, but it does get very loud. We got popcorn in the air. There's a guy with a real chicken here. If you pay attention, you see him holding it up above his head. That's a real chicken that man has. And while this is
a real chicken,
it is a real chicken. He's got a real chicken in the movie theater. And I'll add, this happens about an hour and 40 minutes into the movie. So I don't know how long you had the chicken for or where it came from, but it might have been a while. But anyway,
oh my god,
it has become quite the pop culture phenomenon. This is happening across the country, and not to that degree necessarily, but I have seen lots of movie theaters are actually having to print schedules of when Chicken Jockey will happen so that they can be prepared to go handle what's going down in these theaters for that scene. And it has just absolutely taken the world by storm.
This isn't the first time we've seen a product. In this example, it is a digital product, right? It's a movie, but we have seen meme culture within the last 5 to 10 years really propel the success of certain events that are going on. You know, whenever your movie turns into a meme, I mean, they're tracking when that scene in the movie is going to come on so that they can prepare for what's coming. I mean, I've never seen anything like that before in my life, but to see something like that go on in the theaters just blows my mind. I mean, turning the lights on, like seeing what's like the anticipation, the build up to that. It's just something that I've never seen.
They stopped the movie. I've never gone to a movie in my life that had to be paused in the middle for any reason, like at a movie theater. I mean, it's completely insane. And also, I would throw in, I don't condone this at all. I'm sitting here laughing at this because it is like objectively kind of funny. Do not do this. Be nice to your local movie theater
employees. It's just
employees.
like the shock value of it.
It is. It's the absurdity. Right. Exactly. It's the absurdity. Right. But when you actually get into the practicality of the fact that some high school kid making $10 an hour is going to have to clean up that whole theater, it does kind of suck. Don't do this. Don't do this. Jump up and down, scream. That's all good. Don't make a mess.
It almost like it's And I wonder how often that is happening during the movies. Like, does this happen every single time that moment in the movie comes on? Because if not, it seems like it's almost like an interactive movie.
There's
if,
a
like,
generally,
now they just accepted it.
Yeah, there's always a generally rowdy reaction. You'll see kind of phone cameras light up the theater. I've seen lots and lots of tamer videos than now where everybody just yells chicken jockey and then the theater laughs and then they continue watching the movie. It's not, nobody has a real chicken in there. It's all varying degrees, as is true with anything. But I have seen a fair share of videos that look like that one that we just watched with popcorn flying through the air everywhere. Also, you paid $17 for that popcorn. I know you did. So who's losing here?
Minimum.
Minimum. Yeah, it's crazy. It's crazy out here.
Absolutely. I mean, I don't even know if I've seen multiple videos or if I've seen the same video from like 6 different POVs. But we have seen, movies create video games, or we have seen producers create movies out of popular video games such as Super Mario Bros., Friday Nights at Freddy's, Sonic the Hedgehog. And for comparison, The Hunger Games was a $694 million worldwide. Toy Story was coming up just shy of $400 million worldwide. But it's not the first time we've seen successful movies made out of some of the most popular video games. Never would I have thought something like Minecraft, something so basic, like Minecraft, right? Building blocks, different it's really not a super complicated game, maybe as to why it's so popular, but never would have thought personally that Minecraft would really take off and you could make a movie out of that. Something with Super Mario Bros. When there's like a story mode to something, I see how you can make a movie out of it. For example, Mortal Kombat. There's a story mode of Mortal Kombat, and they've made movies of Mortal Kombat. So the success of Minecraft in the movie and the popularity definitely has caught me by surprise, at least. I don't know what your thoughts are on that, Gus.
Yeah, no, I think that's a very interesting thing. I haven't ever really been able to put my finger on what it is that I feel like is different about this Minecraft movie, but you're exactly right. It's the fact that Minecraft innately does not have a narrative structure. I mean, there is a narrative, somewhat of a narrative structure to the game. You are Steve and you kill the Ender Dragon, but it pretty much ends there.
Right.
And so when you talk about, comparing it to, like you said, Super Mario Bros., which has a robust cast of characters from all of these different video games over all of these years, and then you compare that to Minecraft, which has literally one named character that is a human.
Yeah.
It's kind of crazy to think about. And also, Super Mario Bros. Number 18 movie of all time. Number 18 top grossing movie of all time in the world. I mean, that's pretty crazy. I was shocked to find that. I haven't, no.
Neither have I. I guess we've not aided towards the success of the Super Mario Bros. Movie at all.
I'm probably not going to see the Minecraft movie either. I don't go to a lot of movies. I'm priced out. I'm priced out of movies, people. It's ridiculous. Yeah. It's getting ridiculous.
Yeah, I know. I heard a lot of good things about the Minecraft movie, though. I was talking to Yessie earlier today. She helps and handles a lot of the articles for Tasty and whatnot, but she had mentioned she had taken her kids to it. They said they enjoyed it. She said she thought it was great as well. She said it was superb, to be exact. But maybe we gotta end up checking it out. I don't know. But Minecraft movie economics, what do we got over here, Gus?
Yeah, so $160 million budget. That's approximate based on varying insider reports. That exact number hasn't been released yet. Marketing, also an approximation, $80 to $100 million. This is based on Warner Bros. Typical spend on a movie of this approximate budget. So a lot of approximation happening here. Your break-even target is typically about 2.5 times your budget. So $400 million-ish is what they would probably be shooting for to break even on this one. And then we know that it did $157 million on opening weekend. Obviously, it's hanging around with all of these memes, so I would suspect it to have a strong second weekend as well. And then also the streaming tailwind is incredibly hard to predict, and it's also hard to even quantify where one movie falls into the entirety of HBO Max's revenue, or simply Max. Sorry, I didn't mean to misspeak here. But it's going to be released on Max sometime in the next 45 to 60 days. And streaming projections vary wildly. And even if you could quantify how it's going to stream, it's tough to decide how that contributes to Warner Bros. Bottom line as a whole. But you can see it here in the box office put up against all of the other movies that were on opening weekend this week. Obviously a very clear winner there.
Yeah, 100%. I would have to say, I think TikTok is really the main proponent of just meme culture. Like when we think about when meme culture really started to pop off, I really do feel meme culture I know it was always a thing, but especially with GameStop and AMC, I mean, that was another cultural phenomenon. And I don't think the energy or the levels of that excitement wouldn't have happened without TikTok. Because I was just thinking about like, how do these things catch such traction, and how do these memes really come about? Memes have been around forever, but I've never seen so many memes in a short span amount of a time with this much of an effect, where it's, you know, really aiding the success of certain things going on right here. So it's just a lot to digest, but that's a lot of money, and Warner Bros. Definitely knows what they're doing, and it's helping them break some records. So we'll see how long they can do it.
Yeah, exactly. Yeah, you can take us away here. Current state of Warner Bros.
Absolutely. Warner Bros. Is down 89.5% from the 2022 highs. We're about break even year to date. $42 billion in long-term debt as of Q4 of 2024. Revenue segments declining here. TNT, TBS, CNN produced the most revenue. All are quickly declining, and movie releases equals high volatility. It's almost like a binary event. It's like the anticipation to the movie event. We know that is the event where a lot of the uncertainty will go away. That's kind of how I see it. And then Max keeping them afloat, 95 million subscribers. So I know Warner Bros. Has been taking an absolute beating. So we'll see what this does to their bottom line, and we'll see how things play out, you know, into the long term. But they are down about 90% from the 2022 highs. So maybe we get a little bit of a bottom here, but we'll see what happens.
Yeah, for reference, Netflix has 300 million global subscribers per their.
That's insane. And whenever you made that comparison about the you know, America having about, what is it, about 330 million, 333 million, somewhere around there.
I think we're trending towards 400 these days. Yeah, it was.
Are we getting there?
Yeah,
That's
I think
crazy.
It's like 380, 390. But yeah, exactly. Yeah, crazy to think about. And that obviously is worldwide. It's not all Americans, but yeah, it's crazy to think that Netflix has as many subscribers as the population of America.
Right.
It's nutty. Anyway, all right, yeah. Implications for shareholders. Also, can we take a second? Look how sick this shareholder meeting looks. They got a cool room for
love
that.
it.
But
yeah,
if the Minecraft movie overperforms, good. No, if the Minecraft movie overperforms, that's going to boost confidence in Warner Bros. Ability to monetize these new IPs. It would provide a little bit of unexpected cash flow relief, especially if it performs well above expectations and projections. That may renew some investor interest. And also, as Errol just mentioned, in the age of social media, sometimes investor interest comes from unlikely places like social media. And there can be these phenomenons and these run-ups that happen just because the same people we just saw throwing popcorn in that movie theater have the ability to go on their phone and buy Warner Bros. If they so choose. If it underperforms, that's going to be another hit to confidence in theaters, and that's more of a macro context sort of thing. And what I was just getting at, movie theaters kind of dying off as a whole. I haven't been to the movies in a long, long time. It's gotten too expensive. I know lots and lots of other people who are in the same boat. Well, what's your opinion? You've been to the movies? You still enjoy?
No, I mean, it's been a while. But the thing that I've always thought about the movies, I really compared it to like the mall. It's like the mall is still a thing. It's still popular. You'll go there for whatever reason you might go to the mall, but because of online shopping, it's really reduced the friction just to get what you want on demand and the convenience. And then kind of the same way I see with the movies. Just like you mentioned, Netflix, 300 million subscribers, right? To watch whatever you want to watch on demand. And I think because of the new, the new streaming services that we have was kind of killing the theater model a little bit. So I'm kind of the same proponent.
I agree. And I also think, and it's why TV is dying as well. There's a substitution effect to entertainment. Like right now, if I want to be entertained by something playing on a screen, I can go find something that is exactly, specifically, precisely what I want to watch this very moment without making any sacrifices. And any movie, even a movie that I guess I wouldn't say that you're the most excited to see, but a movie that would have been moderately exciting to go see 10 years ago just isn't going to. Getting up off the couch, going to the theater, paying all that money and sitting down and watching the movie is not going to appeal to me nearly as much as just queuing up a YouTube video and throwing my feet up. So
so maybe it's a little bit of both. Maybe it's the pricing and then the convenience. So it's like it just makes sense to do this instead.
Yeah, especially. And yeah, as you said too, Netflix, I mean, I prefer YouTube, but if you want something incredibly high quality, there's also 101 different streaming services where you can find access to incredibly well-produced movie budget style things. I mean, Game of Thrones is maybe the best movie that's been released in the last 15 years, if you really break it down. So yeah, it's very interesting. Nobody quote me on that. I'm not a movie buff. I know there's been better movies than that. And Game of Thrones is a TV show. I know. Anyway, if it underperforms, back to the points here, heightened pressure on streaming growth, as we just said. They really, really need to be shifting their revenue away from on live TV and in the movie theaters over to their streaming services as much as they can, and that's been going well. Almost 100 million subscribers at this time. And there would be questions about Warner Bros. Management as well should this flop. This is obviously a big risk to take. This is a gigantic budget to give to a movie that you're not sure people are necessarily going to want to see, and obviously they've been validated to some extent so far. But should it underperform profit projections, that's going to raise question marks. I'm sure that somebody was a strong advocate that this thing would absolutely kill, and while it's doing very well, they have spent a lot of money getting it ready to go to market. So it'll be interesting to see how it all shakes out. They do have their next earnings call May 9th, where we will get details on a lot of this information.
You know which model I'm curious on and the success of it. Like, whenever the Jake Paul and Mike Tyson fight, they did a collab with Netflix, and they probably did some type of rev share based off of the subscribers that signed up because of the hype built around that. I wonder what that model looks like for some of these other producers like Warner Bros. Like, I wonder what a rev share could have done with them if they would have taken the route of partnering with a streaming service, someone like Netflix, and how that would have looked in comparison. Obviously, that one's a tough one to split test. Maybe you'd have to do it with a different movie. And then at the same time, it would have to catch a lot of that meme traction too. But I am curious about that model too. I don't know if there's any reasons why they want to have it in theaters, but the structure of getting it on something like Netflix and they do some type of partnership deal there. I wonder if more movies will take the approach of that, or if theaters are going to be standing.
Yeah, I agree with you. I think that there's still this kind of outdated stigma that exists around going straight to streaming, or it used to be straight to DVD, like, a straight to DVD movie, that's going to be terrible. And I think that stigma still sort of exists in the industry a little bit when it really shouldn't. I mean, when you talk about, great shows on Netflix, there's too many to name, the Breaking Bads and Peaky Blinders of the world. And, those are really good, well-produced things that are direct to Netflix. And I don't see any reason movies couldn't be the same way. I think there's just a stigma that needs to be shaken there.
Yeah, 100%. Shorter week in the market this week, not as exciting as last week, and I guess it depends on what you take as exciting. But nonetheless, we're gonna have a longer weekend this week, so be sure to remind yourself to that.
Hold on, you got to give me my beautiful last slide here real quick with my Minecraft landscape, bro. I don't even care if we go over it.
Beautiful,
that's so
gorgeous.
Nice. All right, continue. Sorry.
No, all good. But here we go. Before we end off, we got some key takeaways here. You know what popped up on my feed not too long ago? I saw somebody build a cruise ship in Minecraft. It was the most insane thing I've ever seen in my life. I mean, the detail, you can go in the cruise ship, it has its separate rooms, and I'm like, this looks like it took a whole year working on maybe at least 6 hours a day to complete this and get it done. But that's been popping up recently too, maybe because of the memes going around with Minecraft. But Warner Bros. Is under pressure, and they're betting on the Minecraft movie. Video game movies have a real box office track record now. Minecraft's performance could move the needle, not solely because it's a stronger performer in the box office, but it would signal Warner Bros. Ability to adapt from modern IP, which that's an interesting point there. Keep an eye on box office data in the coming weeks. Warner Bros. Reports earnings on May 9th, right around the corner, and will likely provide more insights on this topic. So we'll see what we get. But we are running out of time here. Anything to add before we hop on out of here today, Gus?
Nothing to add. This whole day of researching for this segment has really made me want to play Minecraft. I might go home and play a little Minecraft tonight.
I was literally, when I seen the video, I was looking at more Minecraft videos. Even today, I was looking at the cruise ship ones, this and this and this, and kind of just going down memory lane on this topic.
Yeah, chat says Bob Sala in chat. Detective Pikachu movie is underrated. I never saw that. I'll have to. I might have to give that a watch. I remember that coming out.
Yeah,
interesting.
100%. Well, that's going to wrap it up for today's segment. We'll see how these things pan out, and we'll see how we're going to manage our positions by next week. I know we got a lot in there that are expiring for this expiration cycle, so we'll see what we got to do in there. Thanks for taking the time to hang out. Be sure to stay tuned for more segments coming on next, and we'll catch you guys next time. Peace.
I distinctly remember getting an email from Tasty that Lookback had just been released, and I was doing the most laborious back test on the face of the earth before that, and I did 2 or 3, and I saw how quick it was, and I saw how quick the data was, and basically instantaneously, I was hooked. I'd always seen all the stuff on tastylive with all the data and all the value I thought that bring, and then it was all of a sudden I could control that and basically make my own segment for myself of what fit. And that democratization technology, I think, drastically changed not only the landscape of what's out there, but drastically changed my ability to learn at such an insane rate. And that's kind of when I developed a little bit more of my own path. I was like, this is the type of trade I exactly want to see, or I'd get some type of inspiration from tastylive to look at that. And that's when my consistency went from like 1 to 30, and I haven't had an unprofitable quarter since.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
If you missed the live show, here's our cherry on top weekly recap.
I had the, what do you call the hot girls dinner?
Oh, you had girl dinner.
Cheese plate?
No.
Popcorn and wine?
Crackers?
I went snorkeling.
You went snorkeling?
But I said the last time I went snorkeling.
And the fact that you've ever been snorkeling is pretty amazing.
That it also implies a future time that you will be snorkeling, right? Not because you didn't say the only time I went snorkeling. You said the last.
The last time. It kind of has the implication.
What did you say? The fact that I've ever been snorkeling is amazing?
Yeah.
Why?
Because she studies physics and it's not supposed to work.
It just doesn't, yeah.
Wait, you're going to Vegas?
I am going to Vegas, yeah.
Ooh, for what? For just funsies?
For my birthday.
Oh, wait, I didn't know it was your birthday this weekend?
Yeah.
Oh, happy birthday.
There you go.
I didn't know you were an Aries.
I am an Aries.
Yeah, that kind of tracks.
Something. What is your sign?
I'm an Aquarius.
Aquarius?
I'm an Aquarius, yeah. Tom's a Pisces.
Pisces.
Yeah.
That makes a lot of sense,
It
actually.
does.
Yeah.
It really does.
That kind of tracks.
I don't even know what that means. Sure. Whatever.
I think it means you like fish.
What happened, girl, during last call?
I lost my
You want to talk about it?
I lost my beret.
You didn't lose it.
I found it.
So you
I'm thinking of getting rid of it.
Oh, new look?
I'm thinking of the new look.
You should do a faux hawk.
Oh,
What is
I think you nailed it, Minota. I don't know.
No, cornrows.
I could see rocking some cornrows.
Yes, cornrows.
I think you should go to Flavortown and just get the Guy Fieri spikes.
Boom, platinum tips.
Platinum, yep.
Is it true? Did you skip the beret yesterday?
On the clothes.
Oh, it looked like it looked like a decrepit old grandmother. It was so gross.
It's like that old monster from Tales from the Crypt.
Get the full scoop by checking out the archives at tastylive.com.
Contrarians! I just signed up for Dough and opened a new brokerage account. Time to get trading!
Newbigard, big barbarian on hillside. To celebrate, let's slaughter 1,000 ewes and suck the raw marrow from their bones. Oh yeah. Why did I say 1,000 ewes? I always get caught up in the moment.
I don't even really like raw marrow. I mean, it's fine, but it's definitely not my favorite.
Hey, maybe next time when I do something cool and smart, just give me a subscription to Bob the Trader, okay?
Thinkorswim will always be my baby, but this one, it's different. We built ours literally from scratch. It's a much thinner, it's a faster, it's a slicker application. Everything's on one page. So you're always looking at the core page and then bouncing around from there to get to whatever you want to get to. We're here to support whatever you're looking to do. We have the tools that you need to be a successful trader.
Woof! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Nikki Batt, University of Kansas. Number 20 because that's how many underlines are in my portfolio.
Brick Welch, Illinois Institute of Technology. Number 23, because I'm trained 23 hours a day.
Dr. Data, Louisiana State University. Number, square root of 1 over 365, because that's the square root of time for one day, which is multiplied times the stock price, multiplied times the implied volatility, which gets you the projected stock price for one day.
I like the looks of that lineup.
Well, being mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
All right, yeah, I'll talk to you. There she is. Good, you found the place. Good, you're not stupid. I dated 3 stupid girls in my life. I loved every one of them. So maybe you're the next one. Having a good day? I'm having an awful day. But then it got really good again. Oh, good. So I'm feeling all right. Hey, where'd you go to college?
I went to
University of Penn State Community College. You didn't know they had one of those, did you? Yep, the Fighting Rams.
Oh.
I'm one of the Rams now. Do you have any sexual fantasies?
Excuse me?
I do. My parents are watching. They're sitting on a rainbow. I'm a half man, half giraffe, and I'm dressed like Brett Favre. What does that mean?
I don't know.
Yeah, talking about it gets me pretty hot, though. Uh-oh, there it is. His pants just got tighter. I'm a vampire. Can you believe that? Does that make me more mysterious and attractive?
What?
Uh-oh, watch yourself. We don't want to get hit by a car.
No.
My brother did that once. He can't talk now.
Oh my God, I'm not serious.
Yeah, pretty serious. Are we getting serious? I think so. How many kids do I want? 5? 11? First meal. Here we go.
That was rude.
This is on you. So much time is flying by.
Yeah.
You're very funny.
Oh, thank you.
Does anybody ever tell you that?
Yeah.
Well, you're not that funny, so don't worry about it.
That's interesting.
Not a big fan of Sam's anymore. But now you know everything about me. I feel like I'm opening up so much. God, I'm scared. This thing's moving so fast.
Yeah.
Oh, wow. I haven't cried like this in a long time. Are these tears? Uh-oh, here we are. Front door. Big first kiss moment.
Oh.
This is just moving a little too quick for me. You're a great kid.
Reading of the tape. More trade ideas.
Sweet.
Still can't believe the Wi-Fi we get up here.
The trade ideas on dough are as good and as true as my honored blade bid ask, with whose edge I gutted 100 marauding conformerons.
To the fearful bid ask.
With this blade, I pried open the gross, smelly lair of the Hydropons Hilda.
I remember that. You were covered in nasty snakes for like over an hour.
And don't forget how I used it to stab the snarling maw of the hideous Minotaur Dibitrix, his putrid breath filling my nostrils. But still, even with these thrilling conquests, these victories that have passed into myth across distant lands, I hereby deem the trade ideas on dough even more powerful. I mean, you probably still need a sword. Yeah. Didn't think that one through.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com.
decision to build Thinkorswim was a byproduct or derivative of 20 years. In our minds, the future of finance meant that we were going to move away from something that was very manual and move to something that was tech-driven.
What we did with Thinkorswim truly changed the industry. To do it a second time was a challenge that I just had to take. The platform is just leaner, cleaner, a little meaner, legitimately built from scratch.
When somebody says tape action, what do you think of?
To me, tape action is a little bit of a historical term because that's how they used to relay the different information for all the different underlyings that you could trade. They would share like the price, the volume. So it'd be a way for people to kind of get a gauge for different markets. But now I just kind of think of it as that little line of information on your screen when you're watching your financial news outlets and seeing what all the different products are currently trading for.
What's a Johnny trader?
A Johnny trader is defined as Nick Batista and myself. We are smaller traders, smaller accounts, mid-sized accounts where we can't sling anything we want. We can't do multiple contracts of anything we want. We are really defined to specific parameters in trading in a small way. So a Johnny trader is just someone that might be doing one lots, one contract here and there, or trading smaller price products.
I tend to call myself a lonely options trader because I really don't have a lot of people that I can share stories of wins and losses with. Like tastylive plays the whole day at my house. I love that they've made everything really easy to digest and take in. I love that you can easily send an email if you have any questions and Tom will be quick to respond to you, or if somebody else, Nick, Tony. I really enjoy that it's a customer focused and it's a customer centric system that you guys have here. And tastylive has definitely changed my life financially because I'm able to determine how and where I can make my gains and not be a passive investor where you're just relying on the markets to do something for you. You could actually go out there and do it yourself.
If you missed the live show, here's our cherry on top weekly recap.
I had what do you call the hot girls dinner?
Oh, you had girl dinner.
Cheese plate?
No.
Popcorn and wine?
Crackers?
I went snorkeling.
You went snorkeling?
But I said the last time I went snorkeling.
And the fact that you've ever been snorkeling is pretty amazing.
That it also implies a future time that you will be snorkeling, right? Not because you didn't say the only time I went snorkeling. You said the last.
The last time. It kind of has the implication.
What did you say? The fact that I've ever been snorkeling is amazing?
Yeah.
Why?
Because she studies physics and it's not supposed to work.
This doesn't, yeah.
Wait, you're going to Vegas?
I am going to Vegas, yeah.
Ooh,